Hello and welcome to the FinTech Finance Search Arena. I'm your host, Doug Mackenzie, and on today's episode, we're going to be looking towards the future. We're going to be looking towards central bank digital currencies and how they can actually become a reality. And I have two experts on my podcast here today who are really going to be able to showcase some of the brilliant use cases that we can get out of the technology, but also more importantly, how we can actually get it done. And joining me today, I have Jeff Stewart, payments consultant, formerly of the Bank of Canada. And Jeff, I've got to ask, how are you doing here this morning?
I'm doing very well, very excited to join this conversation, and there should be lots of interesting issues to explore. Thanks for having me.
It's our pleasure, and I'm really excited to see some of the insights you bring to the table, and really, we've been talking before this session and just hearing some of those juicy use cases I'm very excited for. So thank you so much, Jeff. And also joining us, we've chosen an organization, ProgressSoft, to kind of really talk about the CBDCs because they are becoming increasingly popular with central banks around the world. And so we have Hussein Jundi from ProgressSoft. Hussein, how are you doing here this morning too?
Good morning, Doug. Thank you. It's a pleasure to be here. It's a pleasure to be having this discussion on this interesting topic. And it's a pleasure to be discussing as well with Jeff, this new and emerging technology amongst all central banks and the payments ecosystem in the world.
Absolutely amazing. And Hussein, for our audience who might not be aware, could you talk us through a bit more about your role at ProgressSoft and ProgressSoft itself, please?
Definitely. So I am the CBDC Account Manager at ProgressSoft. I'm a certified blockchain expert, and as per my role, I generate and handle all of the leads that are coming from the central bank to inquire more about our PS CBDC solution that we have developed in-house. Just to give a quick introduction about ProgressSoft, it's a payment solution provider. We have been in the market for 32 years now, and our client base extends to 370 clients in 24 countries.
Wow.
We are working very closely with central banks and commercial banks, and having this wide client base and these years of experience, we could anticipate the need for central banks to have their own CBDCs, their central bank digital currencies. So therefore, we worked on the research and proper development of our own CBDC solution 6 years ago, being one of the first CBDC vendors worldwide to offer such a solution.
Absolutely critical to today's conversation. So I'm saying thank you so much for joining us here today. Now, I guess really then to kick off, saying since your organization has had that kind of historic pedigree in the payment space, could you kind of tell our audience in your own words what CBDCs are? Are there different types of CBDCs? And really, are they as new as some of the attention that they're getting suggests?
Yeah, actually, that's a good question. I like to describe it in a high level just to make it obvious and clear to all of the listeners. So basically, and we have to keep this in mind, is that CBDC is designed to mimic cash in every way and form possible. Only that it is in the digital form, of course. So by definition, it has to comply with the defining rules of money, being a stable unit of account, a costless medium of exchange, and a secure store of value. And just like cash, it is issued by the central bank, it is endorsed by the central bank. Therefore, it should maintain a one-to-one exchange rate with the national money and the national currency. So that is different, of course, than the other cryptocurrencies that we see nowadays, such as Bitcoin and Ethereum and the others. And being issued by the central bank, it overcomes some of the disadvantages, if I may, of cryptocurrencies, such that it does not have the price volatility that the other cryptocurrencies have. It is issued and regulated by the central bank, which is a trusted governmental institution and not a private company or private entity or private people for that matter. So it does not have the concerns that the cryptocurrencies have of having high power consumption for the mining and so on. However, it is still built on the same technology, the blockchain and distributed ledger technology that the cryptocurrencies use. And this, of course, is taking advantage of such a beneficial and secure and safe technology, which is the blockchain. And of course, it is built or based in a private mode. So it's not public, also like the other cryptocurrencies, but private, that only the permissioned nodes and authorized by the central bank are allowed to have access of this ledger. And they are the ones that are validating the transactions. So it's important to keep in mind that, again, it is issued by the central bank and not a private form of money by private companies and institutions. Now, it might be relatively new, the topic of CBDCs, but we can consider it as the evolution of payments that are issued by the central bank. And in my opinion, and as we all may know, that the need and the research efforts are exponentially increasing. So in my opinion, and from ProgressSoft's opinion, it's only a matter of time since we see even exponential increase and mass adoption of CBDC around the world.
Oh, wow. Okay. Yeah, I think that's really hopefully what we're going to start hearing and teasing out this conversation. So Jeff, Hussein's given us a brilliant kind of top-down overview of CBDCs. Do you agree? And also, could you outline some of these key benefits that you think are going to arise when we see these central banks take advantage of this digital currency?
Yeah, I thought Hussein gave a really good definition, and I was pleased to hear the emphasis on it being a central bank liability and differentiating it from other crypto assets, cryptocurrencies, and stable coins, because there is a lot of confusion there. People sort of think they're one and the same. The only other things that I'd add is that often the discussion around central bank liabilities are divided into retail versus a wholesale central bank liability. Retail central bank liability currently is cash, bills, banknotes that we all carry around and we use every day. And retail means it's regular people using it, customers and businesses. And then a wholesale bank liability would be something that banks use to settle their obligations with one another. That's another big source of research and investigation in the world of CBDCs. So I just wanted to narrow the discussion here today. I think we're talking mainly about the retail, everyday consumer use case where the CBDC would replace banknotes and bills and stuff like that. Yeah. The only other thing I'd say is that often CBDCs and blockchain distributed ledgers are treated as somewhat synonymous, or that technology would be used to implement a CBDC. And I think to some extent, there's the jury is still out on what the ledger technology would be. A distributed ledger or variations of it, where you start to have permission nodes, private nodes, partitioned ledgers that inhabit that gray area between sort of the Bitcoin public permissionless centralized ledger and then the current situation with accounts and things like that. There's a lot of gray area in there, and the jury's still out about what that will settle on. Okay. Yeah, in terms of the use cases, that's a great question. And there's different policy drivers that are inciting central banks and governments around the world to explore CBDCs. In the Western central banks, there's a lot of conversation around maintaining control of monetary sovereignty, and especially with the risk of instability coming potentially from crypto. And this was a concern sort of 5 years ago, especially with the rise of Bitcoin, and we didn't know how much it would be used for payments use cases. Some of that concern has trailed off a little bit, as it doesn't seem to be used for payments frequently for retail payments. And now there's a lot of concern and thought being put into what the role of other CBDCs from other central banks how that could possibly interrupt some monetary sovereignty. So that's a key policy driver. And then another big policy driver amongst Western central banks is around inclusion of certain users and use cases, and also providing a low-cost market alternative for payments. So most bank-based payments with cards, credit cards, etc., have some user costs at one end or the other. And cash has a cost to get cash out of a bank, but beyond that, there's not a cost associated with actually transacting with it. So that sort of inclusion and cost alternative, and keeping a floor for the cost of payment services in the market is really front and center for a lot of central banks. But these use cases differ from around the world. That's something we really have to keep in mind. For instance, in the Caribbean central bank digital currencies, the logistics of cash distribution across an island archipelago are a major policy driver. That's something that's very different from what you might see in Canada, the US, or Western Europe. in China and in Nigeria and other places that are testing and moving into CBDC. There's the issue of other alternative e-money issuers and closed loop payment schemes arising. So for instance, in China, we have WeChat Pay and Alipay that the government is concerned about maintaining some monetary sovereignty and monetary control in that case. And then in some other jurisdictions, monitoring of transactions or black market activities, corruption are major policy drivers. So we really have to think about those policy drivers when we think about why central banks and governments are looking into CBDCs. The other thing I'd say is that the policy drivers don't necessarily lead to CBDC as the policy solutions. So all these central banks and governments are thinking about CBDC as one possible arrow in their quiver of policy responses to those drivers that I just mentioned. Beyond that, though, a lot of the excitement around CBDC is that it's a greenfield payment system, if you will. It's a chance to have a brand new payment system that doesn't have a lot of the encumbrances of existing payment systems. So there's a lot of possibilities for innovation, efficiency, and new technologies, and that is a policy driver for various governments, and that could create a lot of interesting use cases, a lot of functionality associated with the CBDC. So that's sort of what's driving the encapsulation of the various use cases for the CBDC from my perspective.
I mean, those are critical. I mean, hearing the movement of money in island nations to actually, we're seeing payment channels themselves, payment rails themselves coming under increased scrutiny and increased innovation. So having that greenfield approach is going to be so exciting for the innovators in payments. Speaking of, Hussein, I really want to get ProgressSoft's perspective as well to see some of those key benefits. I mean, Jeff there was pretty formidable with some of his answers there, but I mean, do you have any extra ones you can add to that?
Yeah, well, actually, I love the way that Jeff described and talked about the different aspects and different issues, because I agree with all of them. I think I'll in other words, or to add to what Jeff said, is that we have to know and realize that CBDC is more than a payments instrument. It has a lot of more benefits than just being a traditional or a usable payment tool. It has much more benefits to the different sectors also, and the different segments that are handling money from the starting off with the country as a whole and the central bank. For the country and the central bank, CBDC will enhance the financial inclusion in ways that have not been achieved and realized before. And this is something that's very important. If implemented well, and if having the proper and right level of interoperability with all of the existing institutions and the governmental or private institutions in the country, this will allow more people to have to make use of such a new payment channel in this sense. And there are a lot of studies and research to even enhance that further and more to cover areas that are geographically hard to access in terms of having bank branches or otherwise, and also in areas that have no internet connection or limited GSM connection and coverage as well. That's on the financial inclusion and interoperability level for the central bank. But there's also, again, it's more than a payments tool. So it has a lot of advantages in the monetary policy and the regulatory aspect as well. It will give the central banks an oversight and overview of the payments that are being done in the country in ways that haven't been done before, and without having to go through an intermediary. And this gives a better understanding for the spending behavior on different sectors of the economy, which ones are doing well and which ones are not, in a very detailed and studied manner. For the central bank, also the CBDC payments, they do not have to go through the clearing or settlement solutions that are there, since it's utilizing the blockchain technology in most cases. So therefore, it makes the payments much easier and the transfer of value is instant. And of course, if we look at it on a higher level, this means that the money circulation in the country will actually be much faster. and this will ultimately have impact and improvement on even the GDP of the country. In addition to that, of course, the obvious reason is the reduction of the cash and the cash costs as well. If I take it down a step and go to the commercial banks and the financial institutions, they are of course very vital and important. They play an important role in CBDC issuance in a country, as they are the custodians of the wallets in the two-tier models that most of the central banks are opting for nowadays. It will also expand their reach and their market that they have, and given the fact that they can now reach the unbanked customers as well. And of course, it lowers the cost of handling cash for the commercial banks and financial institutions as well. Moving on to the next level, which is the individuals segment in the country and what benefits they might be getting from a CBDC, is that right now the individuals will be getting access to governmental backed money issued by the central bank and not private money. And this has many advantages that maybe we can see in certain cases, such as what happened with the COVID. And I'll take an example in the United States when they had to directly give out money to the citizens of the country. There were some issues and there were some hard points in making sure that the money is actually being received at the wallets of the receiving end or the end users. Yeah. And with the CBDC solutions, since everyone has their unique ID and unique wallet ID, this process would be much easier and will be maintained on a very seamless way, and assures the safety and security of receiving the funds at the receiving end. So overall, these are just some use cases and benefits for the different segments in a country. But overall, we can see that there's still a lot of unrealized potential of CBDC, and there's still a lot of what CBDC can achieve in the future as well.
That's absolutely incredible, guys. I've just got to say a massive thank you for those 2 points. I mean, they were absolutely brilliant. They were just use case after use case, and so often we come on these talks and we can kind of talk about it in a very top-down manner, but we don't actually get to brass tacks. We don't actually hear what it's going to mean for the consumer just walking about every day of their lives. And we also don't hear about it from what it's going to mean for the central bank. And I've just got to say again, a massive thank you to you guys for breaking that down to me. Now, for the next question, I'm going to come to you, Jeff, and then the question after that, I'm going to come to you, Hussein, because I think it really touches on your two different roles. But so, Jeff, how might a CBDC actually change the role or responsibilities of banks in the financial industry? I mean, Hussein was talking about how it's going to help banks start getting cash access to some of their customers, and also allow governments to actually see which industry and which markets are doing better. So how's that going to change the responsibilities of the bank?
Well, I think it depends to some extent how the CBDC enters the marketplace and what the other intermediaries are that are going to be involved in the CBDC. Most central banks have shied away from having a direct retail customer service exposure. So their notion is, we're going to set the rules of the game, we're going to issue and redeem the CBDC, we'll have some control over what the supply is, where it is, etc. But we're going to let other guys and companies figure out how it's going to be implemented in the marketplace in terms of the user experience. So the question is, what will the rest of the financial industry and banks, what role will they play there? Now, and this is a tricky question to answer, because of course, these other intermediaries like banks are already well ensconced in the payment space. They have competing products like credit cards, bank accounts, bank cards, and other ways that they're interacting already with their customers. So they're going to have to calculate what role CBDC can play in that portfolio of customer services to determine how they're going to want to deliver services for their customers. So that's going to be a business model calculation that all those intermediaries will have to play in that respect. It's also obviously, there's going to be a lot of issues with interoperability, right? You're going to have to be able to fund and defund a CBDC wallet. So that means connections with commercial bank accounts. and eventually with e-money and other private money issuers, and maybe down the road even non-fiat based stable coins, crypto assets, things like that. So that, but the first most central use case is going to be, how do I get money in and out of CBDC the way I can go get cash out of an ATM or deposit it in a bank? And secondly, how do I get paid from someone's bank account to my CBDC wallet and vice versa? So that interoperability is going to be core in terms of the banks and the financial industry developing the rules and the infrastructure to support that. And also how that plays into their business model, as I previously described. It's also beyond just the existing financial industry players. And here I apologize for my bias about sort of looking at the Western payments landscape a little bit. Obviously, around the world, there's much more intrusion and disruption and alternative service provision by telcos and fintechs and other players.
Yeah.
But from that sort of traditional payments model in a lot of the Western countries, this is also an opportunity for new players to enter, new fintech players to enter in that wallet provision space, in that user experience space, in the message transmission space, and depending on the nature of the ledger, they could be playing roles in terms of the clearing, settlement, things like that. So short answer is it depends on what the nature of the implementation is, but it will have significant repercussions across the financial industries.
That's brilliant. So almost every CBDC is going to be different in what it can kind of afford or offer. So that's very exciting. So I guess with that in mind then, Hussein, what are those ongoing discussions or consultations going to be like with that implementation of a CBDC? Is it going to be, for instance, one central bank says we want to be using it for this use case, and another country's central bank is going to be using it for that use case? Is it going to be as granular as that?
Before I answer that question, I want to agree again with what Jeff said. I think the topic of interoperability is something that's very important, and it's related also to the question you just asked me. So when it comes to interoperability, of course, any central bank or any CBDC provider should ensure that the proper interoperability is achieved with the existing payment systems and the existing institutions and organizations within the country. That is on a first level, because we have to look at the future and we have to realize what CBDC can be expanded to, and that is the cross-border, of course, if we're talking on the next level. So to achieve that, you have to have the proper interoperability and the proper base within the domestic country, in my own personal opinion. And this is something that we are very keen and interested about, and we have been recently awarded the Digital Currency Advancement in Interoperability specifically.
Congratulations.
Thank you. We pay attention to that, and we know that it plays a vital role in achieving a proper CBDC implementation. As for getting the consultation or the proper discussions for a CBDC, this is the topic that's also very important. Now, for us, we provide the payment solutions, but we realize that CBDC is still a relatively new topic to the payment systems and the central bank's ecosystem, if I may. So it is not only important to have the proper and capable IT solution, but also you have to have the proper consultation. It comes just as important. There are still no set or defined rules on how a CBDC should look like. It differs from one country to another. So there are a lot of areas that are still not explored or well guided for the central banks. Yeah. So what the central banks can actually rely on now is having the proper consultations in terms of the economy impact, the finance impact, the monetary policy tools that the bank already has, and how a CBDC can enhance and implement that even further. Therefore, it's important for the central bank to properly define the way that they want to approach a CBDC and properly define what outcomes they wish to see from a CBDC implementation in the country, to properly assess whether this solution will be viable and whether it's overcoming the problems that they have or not. On top of that, since it's relatively still a new topic as well, it is very important for the central banks to be communicating within each other, to attend events and even have private sessions in between the central banks within the same region or even internationally. to see how they plan for the future, how they want to move on with the CBDC, and keep in mind always that it might be interoperable with the different CBDCs from different countries around the world. Again, it might be a little bit hard to realize right now what the benefits are, but it's very easy to realize that there are a lot of benefits that will be achieved with the CBDC solution, especially if more and more countries adopt it and the proper consultation and discussions are going on to have a proper path and a clear path moving forward.
See, that interoperability between them, I hadn't actually thought of. I thought it would be very much insular and domestic, but actually hearing about that just opens up to me a whole another use case for CBDC. So that is very exciting. And I think, the reason that we're having these discussions, we're having these consultations is because maybe the central banks haven't had to move in this way. It hasn't been such an overarching change to the whole system like this for many centuries. So I think it's very exciting to be discussing that and having those consultations to see what we can glean out of them. Now, Hussein, I'm going to stick with you with this question then. And seeing some of your insights on some of the progress that countries have made around the world when it comes to CBDCs. Jeff, very kindly at the beginning on the use cases, brought some of the exciting propositions for island nations, but I'm interested to see where you think which country is kind of taking the lead on them.
Actually, this is a very interesting question, and the more we're seeing, the more we're realizing that there is no certain criteria as to which central banks are researching and looking to adopt a CBDC.
Yeah.
There are more than 80% of the countries around the world that are actively researching and looking to have a CBDC solution. We can look back at the history. There was an exponential increase in the research efforts, but right now we're seeing more and more pilot and proof of concept projects that are happening. And again, and with that said, there are only still a few CBDCs launched around the world. However, the countries that are researching and looking for a CBDC, they are both happening on the developed and the developing countries just as equal. So there isn't a certain criteria. So Jeff brought up the example of China, which is a very advanced country in terms of payment systems with WeChat and Alipay. We can also see some similar examples, such as in Sweden. They also have an almost cashless society, but still they are researching the CBDC efforts. And on the other hand, we're seeing that in the developing countries, and actually Nigeria is one of the very few countries that has its officially launched CBDC solution. So there is no certain criteria. However, each country has its own goals that it wishes to achieve and obstacles to overcome with a CBDC solution, whether that is the geographical limitations such as the island countries, or enhancing financial inclusion, or in some cases to where the people are reliant on private institutions and most of the money is in private companies' hands. To prevent monopolies, the governments are heading and aiming towards having a CBDC solution to overcome that issue as well. On the other hand, we are also seeing that there are a lot of CBDC projects that are happening, multi-CBDC projects that are being explored in terms of having different CBDCs from different countries transacting between each other and achieving CBDC on a cross-border and international level.
Yeah, and I love this concept that it's the emerging economies, that the high growth markets that are playing almost at a faster speed, but playing in the same game as some of the established markets, and we're seeing innovations really be democratized from that side, and I think that's so exciting to see. And Jeff, I'd love to get your perspective as well from the Canadian side of things as well, a bit more of a deep dive on the progress there and really some of the insights and the lessons that you learned there too.
Yeah, well, the central bank in Canada has been very public about their thinking on this issue. They've published a lot of policy pieces and thought pieces that give a good portrayal of where they're at. They're taking a very thoughtful approach. They're very cognizant of entering a mature marketplace, and whether or not this is the policy approach that's going to meet the needs that they've identified. And as Hussein identified a really good point, central banks and governments in the world are working together and collaborating a lot on this. And there have been a number of pieces published through the Bank for International Settlements. And also there's a group of 7 central banks that have got together to do some thinking and publish some white papers. So all of these banks they're considering their domestic policy drivers. Their focus tends to be on the domestic space, but with this longer term view towards how do these things interconnect and interoperate in that international space. So looking at what are the little plugs and sockets that you have to install in this now to make that enable that as a possibility in the future. And then there's also the Bank for International Settlements has an innovation hub that's actually starting to look at various kind of bridging technologies that would allow wholesale CBDC and eventually retail CBDCs to have some of those interoperable qualities. So yeah, I'd say the Bank of Canada and the other major central banks are being pretty thoughtful and sober in their analysis. And really trying to tie it back to key policy drivers and also key policy features around privacy, accessibility, inclusion, things like that they have to make sure that any product that comes to market has.
That's absolutely brilliant, and it's exciting to see that insight. So Jeff, thank you very much. Now, I think it's important to kind of, we have kind of covered this, so it's probably a very short answer, but do you think CBDCs, Hussein, could actually replace stablecoins and cryptocurrencies around the world? Do you think that's something that can kind of actually firmly become established?
Yeah, actually, that's a very interesting question that I've been specifically getting a lot from blockchain enthusiasts, from central banks, and from people and friends, to be honest. There seems to be a lot of conflict in between the decentralized and public cryptocurrencies and the private and government-backed CBDCs. Now, I think this goes both ways, and the discussion is there isn't really a clear answer on that. But I'll have to be a little bit more general, is that I have to talk about the benefits and the use cases that we're seeing nowadays from the cryptocurrencies. And as Jeff previously mentioned, maybe Bitcoin didn't turn out to be much of a tool that is being used for everyday transactions between the people. However, a lot of people are actually keeping their money there, whether it's for speculation, mostly for speculation, and in a smaller way, maybe for the transactions, day-to-day transactions. But what's really a challenge for CBDCs, or like the enemy of CBDCs, is the stablecoins that we are seeing. They are being issued by private companies. They provide the similar aspects of CBDCs, such as that with respect to a certain currency. It has very low to non-transaction fees. And therefore, this is gaining some acceptance and adoption by people from around the world, especially in war-torn countries and countries that have problems with inflation, for example, or having a lack or shortage of currency in that country. And this poses a threat to central banks, because these transactions are happening away from the overvision and oversight of the central bank. And that has, of course, a lot of implications, that it does not properly give proper readings, if I may, for the economic situation in the country. And to be honest, the cryptocurrencies, since they are private companies, they are not really tied up and confined by the regulations that they have to abide by to issue that currency, whereas the central bank, of course, has a lot of legal aspects that they have to cover before issuing their own currency. So therefore, for now, for the time being, I think that the cryptocurrencies and especially stable coins are having a head start, or they have the advantage over CBDCs for now, since that they are being used and they are widely common nowadays. But then again, that's a very important reason why central banks should also increase their efforts in having a CBDC solution to minimize and contain the percentage of the transactions that are happening away from their supervision and with cryptocurrencies. When that is properly regulated, when there is proper CBDCs in most of the countries around the world, and there's interoperability and low transaction fees, then the people would, of course, prefer having a government-backed, central bank issued currency rather than private entities issuing their own stable coins.
Absolutely amazing. I think it's really quite critical to the conversation going forward into the future, as obviously the private cryptocurrencies really become very popular and democratized.
I was just going to add on, I think Hussein did a really good job of talking about the stablecoin cryptocurrency aspect of payments and how CBDCs might interplay, complement, or supplant those things. And just the other side of the coin, of course, is that existing payments systems and payments technologies aren't standing still either. There's a lot of dynamic movement happening in those spaces. So at the wholesale level, we see government or central banks and payment system operators around the world modernizing their high-value payment systems. We see in the correspondent international cross-border payments space, the SWIFT system updating its data standard to a new, ISO 20022 rich data standard that's going to support a lot of opportunities for straight-through processing and innovation. And in addition to other functionality that's emerging in that space around tracking payments and connecting real-time systems. At the retail, everyday customer and business level, there's so much going on as well that people are aware of. There's real-time payment systems emerging and being improved and updated all around the world. And those are real-time gross settlement systems, and they're introducing a lot of functionality as well, regardless of the underlying ledger architecture underneath that. And then there's all sorts of digital bank-based wallets and e-money wallets associated with banking as well. So in the United States, you have Zelle and Venmo as examples of that. The credit card space is incredibly dynamic. They're moving into new use cases. They're moving into push payments, gig payments, all sorts of areas beyond just merchant-based consumer to business payments. And then there's the rise of these closed loop systems where you put your money in, now Alipay and WeChat Pay are some examples that we've discussed already with China. So all of this is happening in addition to the non-fiat systems, the stable coins and the crypto assets as well. So, coming back to our original notion of what are the policy drivers here and what are the solutions, we really have to understand that this is a moving train with a million moving parts. And so injecting CBDC into that landscape and trying to achieve those policy objectives and drivers is a very tricky proposition, and a lot is happening in that space.
Yeah, I think it would be remiss to not talk about how traditional payments are evolving at the exact same time. We're seeing international standards happen at the same time as Hussein, you were saying 80% of central banks around the world are also looking at evolving. So with ISO 20022 and then the interoperability between real-time payments, do you think that these innovations in traditional payments will be enough to kind of satiate the need for CBDCs? Or do you think CBDCs, Hussein, they're coming in fast, regardless of this innovation on these traditional payment rails?
Well, to be honest, from my perspective, I believe that CBDCs, they should be acting as the backbone of all payment systems in the central bank and in the country. This is something that's very important, since that it will be the solution, ultimately be the solution in which all of the transactions are settled and all of the transfers are done through CBDC. So it's very important to have a strong structure to be able to have all of these coexisting with CBDC in the beginning. And of course, this is something that's very important. And of course, we advise central banks to do so, is to have a gradual rollout. And as we are seeing nowadays from all of the implementations that are happening, this is the approach that has been abided by from the examples that we see. They start off small and then they grow and eventually expand to include a lot of more payment systems and include more organizations and fintechs and so on. So again, with that in mind, the existing payment solutions, they should continue to thrive. They should continue to improve themselves. They should have, they should keep in mind to be blockchain enabled, to be able to integrate with CBDC solution eventually. And of course, they will continue to coexist. So, and I might bring a different example than the cards payments method is the mobile payments method. And this is a topic a lot of people are talking about and arguing that they already have an interoperable and financially inclusive mobile payment solution in the country. However, the advantages of having a CBDC wallet or a CBDC mobile blockchain-enabled mobile wallet will be able to enhance the bigger aspects of financial inclusion and interoperability, security, and safety within the country as a whole, and not just limited to that payment solution in specific. So that's something that is very promising for CBDCs and what it can achieve, again, other than just being a payment tool and a payment method.
Yeah. And so I'm glad you brought that up because it's so easy, you know, for me, myself being based in the UK, just being so used to digital payments that actually, you know, you look at the kind of mobile payment rails as well and actually how that's going to interact. And suddenly you've got an entire different discussion that I think we don't have time for today. But to wrap up then, obviously here at FinTech Finance, we speak with FinTechs a lot, but Jeff, and then Hussein, I'll come to you as well. But Jeff, to kick us off, you know, we are seeing FinTechs really not eat up market share of a lot of the traditional banks, but I'm interested to see your perspective on how maybe fintechs are going to play in this new ecosystem. If central banks are the ones that have this almost private ledger, what approach should central banks play in, you know, when it comes to kind of interacting with financial technology companies?
Yeah, so I think, you know, the first thing that the central banks and other players have to do is assess the viability of the CBDCs, you know, going back to what are those policy drivers, you know, avoiding the policy drift into the technology or some of the functionality around programmability or innovation if they're not the core policy drivers. So why are we actually doing this is the first step. And then the second thing is we have to figure out what the user value proposition is going to be for the end users in these two-sided payment transactions. So the, you know, the payer and the payee in a transaction, what are they getting out of it? And is it actually going to be a desirable product? And the road is littered with failed payment innovations. Probably if you look in your wallet, you'll see some of them. So establishing that user value proposition is going to be tricky, and then figuring out the business model. And the business model comes down to what are the functional things that have to happen in a payment? What happens before a payment in terms of onboarding, credentials, funding on ramps and off ramps? What happens during a payment in terms of the user experience, connecting to a ledger, custodianship of keys, and settlement on the ledger, etc. And then what happens in terms of reporting and compliance? Those are the areas where there's all sorts of possibilities for fintech involvement in the regulatory reg tech space, in the user experience space, of course, where they've already been playing very heavily, in the context of open banking, where suddenly there will be API access points and ways to start to aggregate and read and write payment information for end users. Ton of possibilities there, and most countries are starting to develop more of a mature regulatory landscape for fintechs to make them more transparent to end users, reduce some end user risk, and give them a regulatory foothold so that they have a place to play in that space. So in the context of that regulatory landscape and some of those functional roles that they'll have to play in terms of making the payment happen on a CBDC fabric, then there's enormous role for fintechs there, but as they gain greater and greater access to the space, they're of course going to have to do so in a risk-based manner. So that will be sort of an evolution with government regulators and central banks as that happens. And at the end of the day, it comes down to a cost-benefit analysis. Is all of these moving parts going to fit together in a viable way? And is this the most viable way to circle back around to those original policy drivers?
Yeah, and it's going back to this whole notion of it's not only a global effort, but it's a private effort, it's a public effort, it's a central bank effort, and seeing all these forces come together on this new technology showcases something's happening, something's working. And I want to come to you now, Hussein, and kind of see what ProgressSoft has been working on in the space, and if you can wrap us up and talk a bit more about where you see the fintech involvement is in CBDCs too.
Definitely. Well, from my point of view, I think that fintechs are providing a really viable and lucrative means for the individuals to be dealing with and utilizing their services. They're providing a lot of innovative tools and methods that people transact, and they are able to transfer money in between each other. So that is something that's very vital, and it's very appealing for the people to be using. And therefore we cannot stop that. Rather, we should complement that and maybe accelerate that as well, because at the end of the day, what a central bank or what a country wants to achieve is to make the payments easier within the country itself and cross-border. So they have to keep that in mind. They have to make sure that they are also working closely with the fintechs to get them to know what they might have, what plans they might have for the future, and vice versa. Fintechs should also be in proper contact with the central banks, knowing how to move forward and what they should keep in mind as well. But in addition to that, there's also an important topic, which is having a proper tool for new market needs. So as we are seeing nowadays, the payments are evolving, the world is getting smaller, and the need for a proper payment tool is actually increasing. So therefore, the central banks or the private institutions, they have to provide the proper means to facilitate for the transfer of payments in a very accessible way and appealing way for the people to be using. In my opinion, I think that CBDC complies with that, since that it provides means for new markets. It answers the needs of people for a new payments tool and new payments method. And it sets a proper base for all of the payment systems, all of the fintechs, or all of the new entrants even in the market to be able to utilize this technology and this new payment tool that is issued and endorsed, backed by the central bank, of course. So it is very proper right now, and it's I'm very happy to see that we are starting to build the proper base for the future with this solution. Yes.
Yeah. It really does seem to be one of those kind of galvanizing stepping off points that, I don't want to, say it's like the internet, but we really are almost on that kind of precipice of jumping off into a new way that everyone's going to view money. So guys, I've just got to say a massive thank you. As I brought up halfway through our discussion, some of the use cases you brought to my attention, I'd never heard of before. And I think a lot of our audience are going to come away and actually be a lot more invigorated by CBDCs in the future. So a massive thank you to you. I hope you guys have enjoyed it as well yourselves too, yeah?
Thank you very much. Real pleasure.
Oh, brilliant. Well, guys, I've got to say a massive thank you to you, and also to our audience too for watching. You can catch the rest of the series and much more over at ffnews.com. And of course, over on YouTube, but especially on LinkedIn, where you'll see me in the comments. So guys, once again, Hussein, Jeff, thank you so much for your time. It's been an absolute pleasure, and goodbye.